Hey, what's up, everyone? Big Phil here with Big Phil Trading. This video is going to be about scalping breakouts in the forex market. It's going to be on the 5 minute time frame, and obviously, you start out with when you're scalping. Let's just move back just to any random point here. Pick a point. Okay, we'll just go here. Start here, and obviously, you got to mark your levels. I did a video on marking your levels. It's not just 1, 2, 3, you mark a level. I use a specific way I mark my levels. But you always look in the past and you start out by marking your levels. Okay, extreme highs and extreme lows. Now, when you look in the past, you kind of want to go with the extreme, as I said, the extreme highs and lows where the market was. Okay, let's say we mark these levels off here, okay? And then we're gonna be trading from here on out. Now, scalping these levels with breakouts is a little different. I'll show you how I trade it. Now, price comes up, comes down, and as price moves up and down, you're marking your levels as you go, okay? The extreme highs and lows. I'm going to go into trading ranges in another video. This is going to be on breakouts, okay? First off, you mark your levels and then you're looking for breaks of these levels. So you got your levels here, price comes up, comes down. There's really no break. Price comes up, comes down. There's no break. And then as you see, price starts to come down here to this extreme level, has a little break, it whipsaws up, then it breaks down. And then now, if you look here, in an area like this, right in here, you broke pretty much below this extreme low. Price came up and then it had another big candle, strong big candle down. Okay. Now, the way I would get in on this trade is I would enter right away, right here at this candle, at this level, right here on this candle. Now, my stop would go right at the top of that big bear candle. Okay. And I always go for a 2-to-1 profit ratio, even in scalping. Now, and the key to this is you have to have a broker with an extremely low spread. Okay. You can't have a big spread in scalping. But if you look, you broke that level, it came up, you didn't get in. You don't get in on just any break of a level. You have to see what it does. It broke this level, it came up, you're in a kind of a downtrend, then you get these indecision candles, okay? Then it breaks that level again, these candles. Get in on this candle right here, and if you look, your stop would be about just over 1.5 pips would be your stop loss. So you're looking for pretty much 3 pips profit, okay? When you get these strong down candles like this, it's hard for price to come up and break above them. It's just how it is because the sellers are in control. And you basically will look for a 3 pip profit and it comes down and it goes as low as almost 4 pips. So you get out of that trade with profit, and that was a 2-to-1 profit there. All right. Now we'll do some more examples on levels. So you still got that level in play there, but you took your profit and starts to whipsaw around. And you're always marking the highs and lows as you go, but you gotta remember also that you have to go by the extreme lows and highs of previous candles in the past. Okay. You're not just gonna let it move around a little bit here and then mark a high and oh I'm gonna take a breakout here or a breakdown here. Go look at these levels that you marked in the past. Those are extreme highs and lows. Now here's a perfect example of a trade that you wouldn't trade because look what happens. Right here, you get a break of this old level here. This is extreme high and low area. And so is this. Price comes down to that extreme low. You get a big down bear candle, okay? You don't obviously just get in it right away, especially seeing that there's a level just below it with an extreme low. Because look what happens. It comes down, hits that extreme low, then it gets that big candle with the wick, and it shoots up. You didn't have any type of bounce at all. You didn't have a bounce off that level and it break back down. You got this basically reversal candle and went all the way up. So basically what happened here is it went up, broke this level, came up big bullish candle, then you got a big bear, then you got a little, and then pretty much comes up, shoots up to this main level again. And like I said, this is on playing the extreme highs and lows, and you could change your levels. I always change the levels to the extreme highs and lows as I go. Because look, we had the candle set up here, and then it got a little higher. You can move it a little higher to the extreme high. And then as price comes, look at you get up to that extreme high, it comes down, and then you're still at that level. Then look at here. Boom, a big break up right here. Then a big bear candle down. You're not in the trade yet. Then a big candle up. Look at that move. I would be in pretty much on the close of this candle. That is a pure clean break. Above, come down, touch there, come break up, close. I'm in this candle at this level here. My stop when the candles are this big is about 3/4 the length. Now remember, you got full length stops below that green candle, and then you got 3/4. When they're that big of a movement, you go with 3/4 because it has to pretty much come down with strength for you to get stopped out. So you basically would have about, you look at the candle length, it's 12 pips, all right? So you'd want about a 9 pip stop loss. So 9 pips is about right here, okay? And price comes up, and you're going to want about basically with a 9 pip stop loss, you want an 18 pip profit. And what happens? Let's see what happens. It shoots all the way up there. You see that? Let's see what type of profit you could have made, or how many pips it went up at least. All right, because we are in this candle right here. It doesn't come down and stop you out because your stop is about 3/4 the candle down here. Remember, you got to have a broker also with low spreads. But price, let me move this a little bit so we could get it in there. It shoots all the way up to 34 pips. Now, you're looking for an 18 pip profit. This big bullish candle went up 12 pips alone from where you entered. Next candle went up 23 pips. Next candle went up 28. Next candle went up 31, and then it started indecision. I would be out there at that indecision candle because you never know where the top's going to be. But if you see these big candles like this, boom, strength, stay in the trade. Don't just take profit. If you could monitor it, if you're not just, gonna set a stop loss and a take profit double right away, monitor your trade. If it keeps showing strength, follow the strength. Follow these big green candles, and you can increase your profit. But then, like I said, You got a new high, extreme high, because price comes down and then price goes up. Now you could consider this an extreme low here. All right. Price comes up, comes down, comes up. Okay. Comes here, you get indecision candles. It's not like a clean break. It gets below, but these are indecision candles, okay? Then here, I'll show you another example of a trade you really don't get in because this is not exactly clear. Remember, this is extreme high. Price breaks all the way up above that extreme high, okay? Then it breaks all the way down. Then it starts whipsawing around that level there. Now, after it came down here, guess what? I go to that extreme high. It's no longer this level. That's an extreme high that the buyers pushed up to. Comes down, starts whipsawing around. There is no break of this level. And there is obviously, when this level was here, it didn't come up and break above those candles. Okay. So you got your new highs and your new lows, and then you could change them as you go. See, this was an extreme low. Change it as you go. Move it down a little bit. So that wasn't a trade. There was no break. Here, price comes down, breaks that extreme low that's here, comes up, comes down. Now, this would be a possible trade, even though this is a level here. You got three big candles, and you broke this big solid candle, and you got two more candles that came down. Now, if you were to enter this trade, remember this. You enter because you're at this level here now, and you already got a big breakup, and you could see the big strength coming down. You enter anywhere from a quarter to a half stop loss on this candle. Okay? Quarter or stop. Quarter or half percent of this candle stop loss. Keep your losers extremely small and price shot all the way down. I mean, I would have probably been out of this trade with a quick scalp of a couple pips, to be honest. Even though it came all the way down here, I'd be, because it's a risky trade when you get in there because you're at this level. But once you get to know the markets, you could see how they react. And then you'd have this level here. This is now, as you see everything starting to go on, prices whipsawing around, okay? You don't want to place levels when price is whipsawing until it makes a clear low or a clear high, okay? So price came down here. This is your new extreme low, and you would place this level here after price moved up like that, okay? You don't know what the bottom is until the price moves, all right? You got to wait for price to move a good amount in the opposite direction to know what an extreme low is. And then still have your extreme highs, like up here. So price came down and it's bouncing off here. And there's plenty of trades I would take besides this. And this is for another video I'll be making. But I'm talking about breaking levels right now. Basically breakouts. So we'll be trading, or I'll be making other videos on basically price action signals. It's going to be separate videos so we could concentrate on each subject, but with the breakouts here. So kind of make it a little smaller. Price comes down, hits this level, no breakout, boom. Look at this candle. It opens up right here, shoots all the way down, touches that extreme low, then moves all the way up. Now, this is such a huge candle here that moved up and it broke this level. If it breaks that level like that, This could be a risky trade to take to just get in on that type of big, huge break, because sometimes when you get candles like that, you could get a massive move down when it's that big of a move, especially if you're looking at pretty much overbought, oversold. But really, nothing's overbought or oversold ever too much. But sometimes traders' emotions get the best of them, and plus on top of it, you get this big break and then you get the wick on that candle. You got to be careful. Price comes all the way down here, gets close to that level, comes back up, makes another big break up. See, when it's doing that, you got to remember this, guys and girls. Not all breakouts are the same or equal, because when price is moving that much up, you got to anticipate that price is going to come down with that big of a move. I mean, it's just you got to start recognizing the difference in candle sizes. How big a candle is compared to how small it is, and when you get massive moves like this, it's just price is ready to come down. But yeah, so this would be an iffy trade to get in here on that extreme break of this level, and if it did come down close to this level, if you were lucky enough to be able to get in here and set a stop loss at that level, I mean, yeah, that's a good trade, but it's risky. It's about keeping your losses low. So then you're going with your setting your new extreme highs and lows, remember? All right, so and you always wait for price to come down. That's an extreme high. Price comes down, is moving around. I guess you could consider this a extreme low here now when price is moving. So you're bouncing around, bounce around. You get a break, but these ain't nothing special. You're getting reversal candles right here on this break of this level. That's the extreme high. Then you move your extreme low. After price moves up like this, you got a new extreme low. This is the extreme high. If you put this level in here after it moves down, that's okay, I guess. But remember, this is the extreme high. This would be like a level 2 area, but that's the level you would ever want to trade off of. So now we got the extreme low here. We get a breakdown all the way past this level here, comes all the way down, price comes all the way, shoots back up, and this is where I'd be in, and I'd use the 3/4 rule. Price does a massive move down. Now these candles are risky, like I told you, on these big candles like this. If you could watch price move up and get in on this candle as high as you can, fine. If you can't, you get in on the low, set 3/4 stop loss. That is a 34 pip candle. So you would want about a 24 pip loss, which would be about right here, about that green candle. Now this would be more of a scalp trade because price comes up to about 11 pips and then it shoots down. Gets as low as about 16 pips, but you would be scalping out of this trade in this range. You'd be taking your profit somewhere in that range. And then price is moving lower, lower, lower. Then you want to place your highs and lows, remember. That's a low now once price moves up. High is still up there. There's no legit levels you could go by. This is just whipsawing around. These aren't levels. This is a clear level. Price is whipsawing around. Price comes down. Then you got a new level. Let's just move this level up there. These are extreme highs and lows. Then as price moves, It moves up there, that's extreme high. Price moves up, you could consider this an extreme low. I can move this candle up, that's an extreme low there. Price moves up, moves down. You place these levels after price moves up, obviously. Here you get a big break up above this level with this green candle. Price comes down, it's starting to show support up. Now here's going to be a lost trade, I'll show you. But it happens once in a while. Price breaks above that level, comes down, breaks up. I would be in on that trade. Always check how big the candle is. It'll be about a 5 pip candle. You put your stop loss just below that candle. And obviously price came down and took your stop loss out. So you had about a 5 to 6 pip loss on that, which it's bound to happen. It's all about pretty much keeping everything accurate. That's your new high. This is still your new low. As you move along and you see price like come down like here and move up, I wouldn't put a level at that, to be honest, because this is the extreme low. It's too close to this extreme low. This is still your high. Your low is still down here. And what do you get here? Price comes down, comes up, breaks above this level here, and it just above that doji. So you get a kind of a break up, a breakdown, and then this candle right here breaks up again. I'd be in that, just like I told you. You're in on this candle, stop loss goes just below that one. So you only got about a 2.5, 3 pip stop loss, maybe with the spread. You could take about a 6 pip profit on that. Price moves up from the top of that candle to about 6.5 pips. Might be able to get out of that depending on your spread, but even if you didn't get out of it with profit, it eventually moves up to 13 pips, so it would work out in your favor if your take profit wasn't hit, because all of a sudden it comes up here. It's 13.5, 14 pips. And then, as you go, you just have these new extreme highs and lows. These levels get changed. Come on, move, baby. Move. Right there, that's the extreme low now, extreme high. Those are the levels you want to trade. Price is moving along, moving along, moving along. Now look at, you could start seeing examples of what price wants to do. It's bouncing off that level, big red candle right at it, kind of breaks below, comes up, breaks down, but there's a wick there. If you look at this candle, when you see a wick on these, like you get a little break here, but it comes up, comes down, breaks again, and you see that wick, that's a warning. Remember that, a warning, not to deal with it. So price comes up, moves around, moves around. Now here's a perfect entry. Price breaks down again, moves up, breaks down. That's basically a good entry right there. And I'll show you how you can re-enter on these candles. Remember this, and you guys got to write this down. This candle would be the entry candle. Stop loss is just above that. You probably get your stop loss hit. But now here's the thing. You'd be about a 4 pip stop loss on that. You get taken out. Then you see right here, let me show you. These candles right here, after your stop might have just barely got taken out right there, you start seeing these indecision and then the hanging. What's it, the hanging man? That's a price action signal. That's where you get in again right there, because you're in a downtrend, you got taken out with your little stop loss. Then you would put your stop loss above that candle there, and you're in here. This one would be about a 4 pip loss or 4 pip stop loss on it. and you'd move down to about 11 pips or so. It looks like, yeah, about 11 pips. And your stop loss isn't hit, and you had about a 4 pip stop loss. You got 10 pips out of that. You take profit at 8, 2 to 1. 2 to 1 profit. I'm just going to show you guys with these extreme highs and lows, you get the breaks on them on these levels, and you kind of wait for a bounce sometimes to come back to them, and then a break of the high candle. And if you get in a candle without a break of the level, but you see strong strength candles, you could get in those and use like anywhere from the 3/4 to full 3/4, half percentage of the candle lengths for stop losses. And it's just amazing how these levels are just followed, you see, because these are going to make other videos. All these levels of these extreme highs and lows I place, look at, I mean, they're just following order. And here's an extreme high. Look at, boom, came up, came down. That's for other videos I'll make. But moving your levels is key. See, you always go with the extreme highs and lows. That's where the good trades are at. And let me just move this out of the way. But that's an extreme high there. But as price comes, here's a good example of, now remember I told you guys, this is a good, strong candle that broke this extreme low. That's a good down signal. Now, I advise you, here, let me show you something. Write this down, guys and girls. Nope, not that one. Right here. Candle, time, end, and spread. All right. Get this indicator. It's free. It just shows you when the indicator is going to end. Okay. Get that in there. All right. Now, this is a key. Write this down. Where was I at? That brought me to the beginning. But anyhow, I could still show the example no matter what. We got to get one of the big candle breaks. Let me see where they're at. Big candle breaks. Where were we at? I forget where we were at. All right. Well, we'll just. I don't want to forget exactly where we're at. Or yeah, here we go. Where were we at here? I think so. But anyhow, right here, you get a big candle break, and on a candle like that, pip wise, it's about 6 pips. You could keep your stop loss above that candle on that break of this level. Okay. Because when you do that, 6 pips isn't too bad managing your risk. And then, price obviously comes up and never basically tops out at the top of that candle. And it shoots down, comes down about 9 pips, comes up, shoots down. You eventually get your 2 to 1. It kept going, and whether you take your profit or not, 2 to 1, that's up to you. Use a trailing stop, a break even set, But my example is basically when you play these breaks of these extreme highs and lows, keep your stop losses anywhere from the top of that entry candle or low of that entry candle. Look for 2 to 1 profit. Look for strength on those candles. And if you do have a big break showing strength of a level, use like the 3/4 rule where you 3/4 the length of the candle. Some candles are, like I said, 15, 20 pips long. Sometimes even as you've seen 30 pips long. You use 3/4 of a stop. But see, and another example is too, things not to trade. Like for example, let's say we have a level here that's an extreme high right now. And you're always looking left. We'll consider this an extreme low. But price moves down. As it moves down, you got your extreme high. Price moves here, moves up, moves here, moves up. Look how price came up and hit that extreme high and then went straight down. I'm gonna make another video in the pat or in future about how to trade these levels, ranging levels. But here's a perfect example of the. Let's see now. You could still use the full stop loss, but this is an extreme high. Come up, it didn't break and stay above, but it come down, boom. Now you got this big candle that broke it. Comes down. Now look at these indecision candles right here. I get on like a break of this yellow candle. Like I said, there's sometimes you get on just breaks when the candles signal this, and then you'd have a stop loss because you got a break of that level, come down, bounced off that extreme high, and you would have a stop loss of about 5 pips at the most. Price goes all the way up to about 13 pips. And let's see, let's just change it up here. Here's an extreme high now. Extreme low is still down here. Right here, I guess that wouldn't really be considered an extreme low. You could mark the level and just see how it reacts, how price reacts to it. But here's the extreme high, price comes down, hits this level, comes up. Now this is the extreme high here. You're seeing breaks, but look at these candles, how tiny they are. There's like no like strength to go up at all. And then look, you get a bounce down and it's bouncing around this level. Then you get this big candle break up here, but look at, there's a wick there. That wick is danger zone. That means price might want to come down. Even though it's breaking this level here with this one, that's a wick. So now here's a perfect example of a good trade. You got a new high, new extreme high, okay, right here. That's the new extreme high. Price comes up, you get these indecision candles, it's nothing major, but then boom, you get a break of that level, then you get a break of these indecision candles. I'd be in this trade at the top of that candle, stop loss goes below it, so it's like a 4 pip loss. Price comes up, how many? We'll see. Price almost hits 8 pips, almost a 2 to 1. Then it comes down, it's whipsawing. Your stop loss is below basically these candles right here, or below this big candle right here. So it's whipsawing and it's showing nothing. Get out when it's doing that, guys. When it's doing that, just take like 3-4 pips profit. Take a 1-to-1 profit ratio if you can. I mean, if it's not showing strength and goes up, because the good thing is it didn't come down and hit your stop on this big strength candle here. You know, sometimes I just gotta hit the clear all my objects. But for the most part, breaking levels is pretty simple. It's knowing about once those levels are broke and it's a strong candle, whether you should put your stop loss below that candle or use the 3/4 rule, and also bounces off those levels after they break, whether you should put your stop loss above the new break or off just basically the indecision candles where it breaks maybe the previous one or two candles. Might sound a little confusing, but it's about knowing how to set your stop loss. Also, you have to remember, you know, you could go into profit, for example, 1 to 1, and then just put your stop loss to break even. You could always do that. So this video on basically, and remember, you have to use your extreme highs and lows. That's what it's all about. Trading the scalping method on the 5-minute chart. Extreme low comes up, that's made an extreme high, comes up, these are still valid levels here. And remember, this is extreme low. Once price comes up and moves down and moves up, this isn't really a new level you place because it's too close to this. This is the extreme low, extreme high. Don't even worry about this area. See, because price moves along, look what happens. Comes up to that extreme high. Get a break. Now here, like I said, these are, as I said in the past, this is extreme high. It breaks above and you get a big wick there, a big wick. Even though it's a green candle, you don't necessarily just trade on the break when you see these wicks. You have to watch for these. Price comes down and bounces off this level and looks like it wants to go up, but then look what happens here. You get more indecision candles, okay? You don't just get in on this candle here, especially when you got this massive wick. Now, if price would have came here and shot up above this level, that'd be a valid trade. But look at the indecision. You have to wait for kind of confirmation sometimes. So, hope you enjoyed this video. Subscribe. I'll show you more tips and tricks on price action. And everyone have a great day. Bye.